This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Hello everybody, welcome back. Let's get straight into it, shall we? So we got that move up from yesterday, as I said, exactly as expected, like Carl the Moon would say. You'll have to let me know, right? Because I get a lot of trolls on my channel saying, "Oh, the market does the opposite of what you say." Well, it's really not the case. I mean, I know my own win ratio because this is what I do for a living. I know that it's okay. Do you know what I mean? Otherwise, I wouldn't be able to sustain myself and my family, from doing this. But I mean, I imagine you guys probably watch other YouTubers. I mean, just let me know in the comments. I'm not making calls here. You can see what I'm doing. I'm explaining my trading strategy, my expectations of the markets, all markets, and based on trend and momentum, and risk and reward. That's all it is that I'm doing here. I'm not saying, I'm looking into this crystal ball and I predict that Bitcoin will reach, blah, 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 blah. That's not what I'm doing here. You can see what I'm doing. This is why I run the Patreon. So it's not for me to make calls and say, I prescribe you this coin. That's not what I do. It's me showing you the process that I put all charts through. And so you could hopefully learn from that and at least take it on board and then build upon it yourself in some way or another. It's just a process of learning. That's all it is. I want people to learn. My process, in my opinion, I feel is actually quite simple. But let me know in the description below, how do I compare to other YouTubers? Am I getting it right or wrong more than others? I don't know, because I don't watch them, you see. I do have a sneaky feeling that all YouTubers, if they all seem to be saying the same thing, which from what I understand sometimes is the polar opposite of what I'm saying, it sounds to me like a lot of YouTubers are actually just copying some other YouTuber and using their analysis as their own. That would be absolutely completely possible that that's what's going on, and that's why there's always a huge sway of people believing in one thing opposed to what I'm doing, which is simply just based on my own chart analysis. Anyway, let's get into the charts. Let me know in the description below. And join the Patreon if you want to learn. Right, so yeah, we're moving up, and if we go to the daily, we can see that actually yesterday closed a new candle body high. This is the largest one of this current run, so just below 25,000. That's a big deal. And then from there, we lifted off and currently working on a new candle body, bigger than all the others as well. I know it's not the the wick high, but if the candle bodies count for more than the wicks as far as I'm concerned, wicks tell a story, bodies tell a story. Wicks show sellers, bodies show buyers. So we're looking pretty good, and stability so far in this market looking pretty good. Above all major moving averages as well, looking pretty sweet. Again, the MACD crossing above the 0 point to add further momentum to this move up. I think it's only a matter of time and not that long at all before 28,000, 32,000, and potentially the top target around 38,000 gets met. I know it sounds ridiculous, but you know me, I've been saying that I believe quite strongly, to be honest with you, that we're in this portion of the market here. And I'm not doing fractals or anything, but I just want to show you as far as sentiment is concerned. Bear market end, initial moves up. This is kind of where we were, and we're looking for that final blow off top area for this current run in the market cycle, reaching between 32 and 38. That's where we'll find a big consolidation, probably back down into the 20s, maybe even the teens. We don't know, because we'll be consolidating. If we move up that fast, we'll be consolidating for a long period of time. Maybe between 2 to 6 months, and that will make us vulnerable to FUD and financial and economical issues, geopolitical events. While consolidating you'll be getting kicked down the stairs by all of that, and there's nothing you can do. But for the moment, things are looking still pretty good. And I would say that despite lots of altcoins going down, I think there'll be a time and a place to actually make a rotation. For those of you who don't know what that means, it's basically where Bitcoin has finished its run and the risk and to reward becomes more appealing on the Bitcoin dominance chart to actually go into altcoins. So this has been a bullish chart for quite a little while now. And now I've always said, look, while floating in this no man's land with a chart set up like this, it does present itself as quite bullish for Bitcoin. And only when we start to meet resistances, which we're moving up towards at the moment. The first level of resistance about 47% to about 48%, which is still quite a large area really to start to scale into altcoins. We're talking about basically a 4% range to start to scale into altcoins for this dominance chart, but we are getting closer to it. So a rotation would mean that Bitcoin reaches a temporary peak, and then the money flows not just into altcoins, but out of Bitcoin into altcoins, creating a downwards move on the dominance chart, usually resulting in some serious gains being made for altcoins. So that's your alt season. So rather than saying that we've had an alt season recently because there was some gains on alts, that's not an alt season. An alt season is like the one we had over here, which I got exactly as expected. The trolls hated that. What are you talking about? This guy's buying alts in a bear market. Oh my god, he was right. 100%, 200% moves up in a bear. What's he done? How did he do that? Same as always, play the game. I got this one as well. We all got this one. Thousands of percent gains. But I've been doing this obviously for the whole of the last bull market and in the bear market. It's a major way to play the market. This is why I say that, if you buy Bitcoin, don't worry if it goes down a little bit, because that is also a trading pair. You buy Bitcoin, say you bought one Bitcoin, I don't know, last week at 26,000, and you went down. No big deal. That one Bitcoin remains one Bitcoin. When you get to an area of rotation, you can flip that one Bitcoin to 1.5, to 2 Bitcoins, to 5 Bitcoins, reasonably well and quite quickly once you find yourself in a rotation event, which we're not there yet. And even if we get into these areas here, I won't be looking for a massive alt season. Like I say, we got a rotation out of here, last summer. And, the maximum gains that we got was about a 200% gain on the altcoins. So, we should expect nothing more than that from around here. Anything from 20 to 200, which again, I understand is a large difference, but that's what we should be looking at. And we're not there yet. But don't worry, I'll be singing from the rooftops when we get there. Right, so let's have a look at the traditional markets. So the euro currently up 0.5%. We're moving back up to the top of this Bollinger Band, where we should expect a rejection again. This is a tight range. This is another bullish test of a retest of the 200 exponential golden cross retest. It didn't break down, which is fine, but the fact is we've had 3 retests of it now. We should have had the V shape at this point, and we haven't. The ECB, the Fed, they're causing indecision, within this range now. Now we don't know, and I don't really know which way it's going to break, but there is a range to be played, and the range so far is 200 exponential 105.4, Bollinger Band top 58 simple moving average 107.2, 107.3. That's the range. So we should expect supports around here. We should expect rejection around here until the range is broken, and then the trend will continue. I'm not here to tell you which way it's going to go, because the central bankers are making it very difficult for any trader to take a position in this long term. So far, we're stuck in a range which has, the ability to long from here and the ability to short from here. Right, let's have a look at the S&P, which did work quite well, to be honest with you. I wasn't expecting this move yesterday, but we got it all the same. And again, it's still good for the markets. That's quite a nice green candle there. But we are approaching Bollinger Band Center, 21 exponential, 50 exponential, effectively a death cross retest, anywhere below 4,000. So we should also expect, rejection around here today. Now, if we don't get rejection, excellent. No big deal. In fact, excellent stuff. We're probably looking for a big, bold move. But actually, I would look at this area as an area to short from. I know that's disappointing, but that's what I'd be thinking. I'd be thinking we're probably going to actually see some downside move here. Unless, of course, something happens with the banks. Whether it's good or bad, it's going to impact the S&P. But yeah, it seems pretty good so far. And again, there's a lot of things going on outside of the world. We're expecting stimulus now to come in to the markets, or at least lack of or lowering of the how do I put it? It's too early for me. It's too early, all this. The raising of rates to be pulled back a little bit. So maybe a pause. I don't know. But 50 basis points seems unreasonable, and I think the markets have priced that in. This is exactly what we said last Friday about the Forex market. I said the Forex market doesn't seem convinced about a 50 basis point. All the other markets were coming down. The Forex market wasn't. This is why I said we're looking for a big move on this, and lo and behold, we got our big move, and there's your big move right there. This is exactly where we were last Friday. I was saying, look, yeah, we're down. This is an area to bounce from. If we're going to get a V-shaped recovery, it'll either happen on the 200 exponential, 200 simple. That's textbook stuff. Kapow. Trolls hated it as those green candles entered their anus. Right. So the last thing we'll look at is gold, which is actually very much like a Bitcoin chart, to be honest with you. This is what I was expecting to see from Bitcoin, which is a pullback into the 200 exponential rather than the simple. And there's your V-shaped recovery. The one thing to think about when we're looking at this gold chart now is that the money flow index is quite high, reaching 90 on the daily. I think it's reasonable to assume that we do reach up to our previous high, 1950, and then have a pullback. Let's admire the size of the move and the status of the price action to moving averages. We've not retested any of these on the way down yet, so we've got our V-shaped recovery, but without any further retest of these. So this is being bought up faster than traders can cope. I would expect a consolidation or a pullback into any one of these moving averages, preferably the 10, maybe even the 20 at some point down the line, maybe next week or so. We saw something similar around here, didn't we? A nice big run up from the bottom area of support, exactly as expected. And what did we see? Meandering around here and then finally getting picked up on the 20. So the Bollinger Band Center. That's the sort of thing I'll be looking at here over the next month or two, getting picked up and then continuing this run up. And that's what I would expect to see with Bitcoin as well. So targets for Bitcoin currently, we're looking to actually break out of this range now decisively. Next stop 28, next stop after that 32, top target maybe around 38. It doesn't mean it's going to happen today, trolls. So I know that you're just rising. Probably not yet. It's probably a bit early for you guys waking up in your mother's basements. I'm speaking just to the trolls here, obviously. But yeah, when mummy wakes you up with your pancakes and maple syrup soon, and you watch this video, don't expect it to reach 38,000 by the time the video is finished, or that mummy has taken your plate away. It's not how it's going to work, right? These are targets on the way up on a trending move that so far look quite good, but there's going to be bumps along the way. We think that Euro is going to reject just at the top of that Bollinger Band. We think that the ECB and the bank and the Federal Reserve are going to start playing slaps in a minute in each other's face. I'm doing 50. I'm doing 25. We don't know what they're going to. It's going to impact the market. But as far as the trending move is concerned, and the technical analysis applied to this chart and that of gold and of the Euro generally speaking at the moment, things are actually looking quite good for continuation. All right. So you would just enjoy your breakfast, and yeah, mummy's got the washing on. Don't worry, your socks will be presented to you soon and put on your little chilly feet. Right, other than that though, I hope you have a nice day. If you want to pump my algorithms, you can talk about the weather. We are British, I am British, which is obviously our favourite things to talk about. It's 8 degrees and it's cloudy. I don't know if you looked at this video over the weekend or earlier on in the week. It was actually snowing here. At one point it was -4 degrees. The weather is as volatile, if not more, than these charts. Anyway, I hope you have a nice day. Feel free to join the Patreon. Gate.io, link in the description. It's a decent deal. 25% off all your spot and futures fees for life for setting up an account using the link in the description. Otherwise, I hope you have a nice day and a good weekend. Take it easy.